What is going on, traders? So AMC went absolutely nuts on Friday. A very similar pattern to what we saw around March earlier of this year. This was due likely to a gamma squeeze, which I will explain what that is and what the effects of it is and why AMC can continue to rally for a few more days and rally violently if the call option volume is sustained. The last time AMC did a similar thing back in March, it rose another 71% over the course of 4 days. So let me get into what happened with AMC. I'm going to get into our trade, which is currently up 120%. I'm going to get into AMC's chart and see what its next resistance level is and what price it could potentially reach if the market continues to buy call options. And I'll explain why exactly I'm talking about call options here, because that is what contributed to the gamma squeeze. So let's get right into it. As you see here, you can see that our trade on AMC is currently 120% up. I sent out these call option alerts in the Traveling Trader Academy. As you can see here, the alert was for the AMC 20 call expiring August 19th. I didn't take short dated calls for a reason. And honestly, I'm glad I didn't, because AMC was actually really down in the morning before rallying back up. And those short dated calls would be exponentially down because they don't have a lot of time value left. They don't have much extrinsic value left. And AMC doesn't always make a big move immediately. Sometimes it takes a day or two. So I wanted to give myself enough time, which is why I bought the August 19 calls. And before we get into why exactly AMC rallied and why because of this AMC can actually continue to rally further, I just want to say that if you've always wanted to learn how to trade options, if you've always wanted to learn how to day trade, and this stuff just seemed too elusive and complex for you, then consider checking out the Traveling Trader Academy, where we have courses for these things, but also you get access to the Zoom calls and the masterminds with me, where I go over any single question that you have on day trading, technical analysis, option strategies, options trading, trading in general, how to do fundamental analysis, etc. Those are interactive calls with me personally. And obviously you get access to the chat with thousands of traders talking trades all day, every day, as well as the alerts, the weekly updates, the stocks to watch, the stock market analysis, etc. It's a really great value. Check out the link in the description below if you want to be part of the academy. Would love to have you. Just keep in mind that open signups are closed, so you actually have to apply to get in, but that link is in the description. Okay, so what is a gamma squeeze and what happened to AMC? Why did it rally 19% on Friday? And why could it continue to rally further if the call option volume persists? Well, a gamma squeeze is what happens when we get an abundance or an abnormal amount of call volume being purchased. So when retail traders like you and me go out and buy call options for AMC expecting it to rally, who is selling you that call option? Well, that is typically a market maker. That market maker is creating the call option out of thin air to sell it to you because he or she will get a small commission for doing so. However, if you are buying a call from this market maker, that means the market maker is selling you a call. And what happens when you sell a call? Well, let's just think of this logically. If you buy a call and you are bullish on the stock, meaning you want it to go up, well, the person that's selling a call has to have the exact opposite position. So they are betting that the stock is going to go down, except for market makers aren't really betting that the stock is going to go down. They just want to benefit off of the commission of selling you those calls. So in order to cover themselves, what they have to go out and do is buy 100 shares of AMC for every call that they sell you. Now, this is very typical behavior when call option volume is normal relative for that stock. However, I want to show you what call option volume looked like last week. So if we take a look at AMC, it was the second most traded stock in terms of options. And you can see that it traded 403% of its typical daily volume of call options, meaning 403% more than what it normally trades. Now, this was because they were reporting earnings on August 4th. Obviously, we are seeing a bear market rally at the moment because everything is priced in. So there is some newfound enthusiasm re-injected into the market. And also AMC is at a technical level here. It's really been in this lull that we saw back in March, this tight channel here for AMC going all the way back to March, minus the outliers that we saw end of March and then the outliers that we saw in May where it dropped below this level. Otherwise, it's been trading in this normal range. So the fact that it was releasing earnings, the fact that there is newfound enthusiasm in the market, at least just in the last couple of weeks as of the time of this recording, and the fact that it has been in sort of this sideways technical channel, call option buyers were enthusiastic on AMC, expecting that there would be a breakout. So we already took a look at the call option volume compared to what it typically trades at. Let's take a look at the stock. So if you look on August 5th, 125.3 million shares of AMC were traded. This was likely due to what we talked about before, this gamma squeeze, because so many call options were bought. That's why so many shares were traded, because a lot of this had to do with market makers who had to go out and buy the shares to cover the calls that they sold to the retail investors. Now, if you take a look at the call option, if you take a look at the stock volume, 125.3 mil, when was the last time that AMC did anything even similar? Well, let's go back and take a look at March. If we take a look at March 23rd, it traded at 170 million shares. Now, if we go back to the chart and look at March 23rd, this was the start of its rally, breaking out of the same range that we saw back in mid-March. So this day we did about 14%. There were a couple of lull days and then a huge candle at 45%. This entire move from the bottom to the top was around 71%, and this was after the initial breakout. So very similarly, here we have an insane amount of volume, not as crazy as 170 mil, but we have 125.3 mil. And we saw this initial breakout, this 18, almost 19% candle breaking out. And it is very likely that we could test the top of this range here that we saw back in March, this $30 and up range for AMC. However, what needs to happen is we need to get some decent volume in the next few days. You can see the volume following that March 23rd breakout. So we will need folks to either continue buying call options or continue buying shares in order for us to see this continue. Now, this is a bullish engulfing candle. This is a very bullish sign. However, when it comes to candlestick patterns, this right here, just these two candles are not enough to confirm the move. We're going to need to see the next candle at least to know that this bullish engulfing candle is actually confirmed. So as long as in the next few days we get above average volume, even if it doesn't amount to the same volume that we saw on this day, if we just get a few above average volume days, well, that could tell the market that, hey, investors are looking really bullish on AMC. Let's continue the call buying. And then we could see another breakout to that 30 level and above, in my opinion, if the call option volume persists. Now, if you're wondering how I spotted the volume in real time, well, this right here, optionseducation.org, this is lagging. Obviously, the Yahoo historical data is lagging. However, I used an options flow tool called Cheddar Flow, and I looked on this day on 8/4. This was the day that they were releasing earnings after market close, and you saw the call flow to put flow was 92% to 8. So it already told me that there was a potential squeeze of some sort that could happen if AMC got the actual volume that it needed in order to see a gamma squeeze or a short squeeze or some combination of both. Plus, breaking out of this technical channel here, seeing this type of call to put ratio gave me further confirmation that, hey, you might want to buy long dated calls here, or sorry, not long dated calls, but mid dated calls. Like I said, I didn't buy the ones that expired on August 5th. I went a couple weeks out and bought the monthlies that expire August 19th. Now, I did take profit here on some of my position, but I am leaving runners just in case we do see that volume kick in and we can actually see AMC go up to the $30 level. If we do, then those $20 calls are going to be even more in the money and are going to be up insanely, probably in the range of 400% or more if AMC is able to hit $30 in the next few days. Anyway, traders, that is it for this video. This seems like an old school video, good old AMC. I just wanted to go over this trade and tell you what my thinking was, explain to some of you who don't know what a gamma squeeze is, what a gamma squeeze is. It really helps to go over these trades after the fact, I think, and you guys seem to like these trade recaps. So leave a comment down below if you do, leave a big fat thumbs up if you do. Let me know if you're trading AMC and let me know what your price target is as well. Again, if you want access to all of our trade alerts, the courses, the Zoom calls, the mastermind calls with me, access to thousands of traders talking trades all day, every day, the analysis, the alerts that I send out, the stock market updates, my portfolio that I'm about to release. I'm about to do a brand new portfolio about how to invest in a bear market because a lot of you seem to want me to focus on that topic. Click the link below to apply as signups are now closed. Subscribe to the channel, hit that notification bell. Stay safe out there, traders. Peace.